What's the message in the technicals right now, Katie?
Well, yesterday we saw a gap down by the S&P 500. That's quite rare, and it really just marked an unsuccessful test of resistance at that March high, which is roughly 2401. It's a very widely followed level, as you can imagine. It's final resistance, so really the last hurdle to new highs. So it's not really unexpected to see some kind of pullback or consolidation near that level. To me, the pullback is constructive. It's helping to relieve short-term overbought conditions. They never feel good. Sentiment, of course, was somewhat bullish, and now it's already affected by just that one day. So.
What are you expecting now, just as a base case, a shallow pullback and then getting back on trend?
I think so. So to me, when you see the fast and furious move like we saw yesterday, it's actually more indicative of a bull market than otherwise. It's really the slow grind lower that you worry more about. You want to get a bit of a flush out here. To me, the support is around 2340 for the S&P 500. If that's broken, which I don't expect on a closing basis necessarily, 2280 becomes the next support. So even if it is taken out, then you have additional support to cushion the pullback. And I think we want to always keep in mind what the prevailing long-term trend is, which is higher for the market.
So is today the day the buy the dip plays out?
I don't think we're quite there yet. I watch the market internal measures, so those are things like volume and breadth and leadership and sentiment to reach oversold extremes to suggest that we have a buying opportunity at hand. We did not get any of those oversold extremes yesterday, but we're getting closer. Probably a couple more days and we'll start to see them. So we look for that, and then we look for an uptick in momentum.
What about support on the 10-year? I mean, 2.18 was where we reached today, right? It was a dramatic move yesterday. It was a crazy day. Where's support for yield?
I'm looking at about 213 to about 216. That's in part based on the 200-day moving average and what we call Fibonacci retracement levels. So these levels tend to hold importance as support and resistance. So I do think we'll also see the 10-year Treasury yield really kind of hold up above or within that support range.
When? When can we get there?
I think days, not weeks.
Oh, so it's gonna be a fast move, and then do we reverse up from there? Like, do we pop back up to like 2.5, or how does it play out once we hit that level?
So the resistance is around 2.4. So I think we do rebound and ultimately get above that 2.4 because the prevailing trend there for yields is also higher. So when you look at the long-term momentum indicators, things like the monthly MACD indicator, they are supportive of that uptrend, and that's what we always want to keep in mind when we get these pullbacks.